what's going on, everybody? Welcome to another episode of the Rapid Review. We're going to be going through everything that went on this week, get you guys ready to trade for next week. Apologize for the short notice, busy weekend. So hopefully you guys are catching this live. If not, then you guys could always watch the replay. But again, I'll try to be a little better at getting you guys an update on when this is going to go out. Most of the time it's Saturday mornings. This week was just a little hectic. So appreciate everybody live both on YouTube and on X, and as always, chat's open. So without further ado, it's time for the Rapid Review. All right, so as always, there's a disclaimer. As you guys know, educational, informational purposes only, not financial investment or trading advice. Read through that. Market direction. We are still in an uptrend. Power trend is still on. This is inaccurate. NASDAQ. When we're looking at the S&P this week, we had a 2-day drop off. So we had a drop off on the Wednesday of this week and Friday of this week. We lost the 11/4 distribution day, and then we also lost what was the 11/6 distribution day. Both of those dropped off due to time. We had talked about that last week, so we kind of knew that was going to happen. What we didn't know was going to happen was we were going to get in distribution day on Monday, and we also get in distribution day on Friday, up on volume, down on volume on both days. Looking over at the NASDAQ, we're sitting over at 6. We gained distribution day on Thursday and on Friday, and then we also lost a distribution day on Friday as well, and that was losing the 11/6 distribution day due to time. So pretty high distribution. One thing I did want to note, my distribution day count is slightly different than what you'd see on IBD. Not different rules, just the volume source. I keep showing the S&P having slightly higher volume on a lot of these days where they are not seeing that on their end. NASDAQ, index volume is a little funky. Different data sources showing different things. I try to check a couple different data sources and come to an overall conclusion. This is where I'm at. I say this every single week when we ever have like some discrepancies. It doesn't change. It's a secondary indicator for me. What the market is actually doing on a technical level is more important to me, price and volume. This is just something that I use to kind of keep track and gauge how much selling we've been seeing coming into the market. So mine definitely more on the cautious side. So take note of that. But going into this week, the S&P was down 0.63%. NASDAQ was down 1.62%. Dow down 1.03%. S&P is up 16.08% for the year. NASDAQ up 20.12% for the year. And Dow up 13.90% for the year. Looking at the moving averages, we'll go a little bit more in depth into this when we start looking at the indexes. But you can see the big thing here, S&P broke the 10 and the NASDAQ broke the 10 and the 20. All right, so let's do that. Let's jump over to the indexes, and as we always do, we'll look at the NASDAQ on the daily. Zoom in a little bit for you guys. So, right, we had this big decline. Pulled back. Looked like maybe we were just getting a pull back to the 50. Rally, fail. Complete fail. Took out these prior lows. First lower low we've technically seen since the rally had begun. But then what happened, we kind of just rallied up from there. You can see we just kept climbing. This area of tight kind of side, not tight, but this area of sideways action was a concern because we had the high here. We had been rejected here. We have been rejected here. So we were really watching this high here. We broke through, and we just, after we broke through what was a really strong rally from these bottoms, kind of just moseyed on, wedging higher. Not ideal, but also we didn't want to see a rapid rise. It was kind of good to see that we were starting to pause and just kind of like mosey our way around. We had the holiday week in here for Thanksgiving, which led to this decline in volume, led to some lackluster action. yeah, so that really wasn't anything too concerning just yet. We were starting to see stocks starting to look a little bit better, bases forming, things breaking out. Some of those names definitely, just broke and ripped through some of the bases, not really presenting any sort of handles or tightness areas or stuff near pivots. That kind of gives you a little bit of a better way to put a technical stop on. But things were looking okay. So we came into this week and we had a little bit of this like stalling action. This actually was a stalling day as we tried to make our way higher and then we reversed. Again, somewhat expected given that how we were just riding off the bottoms and we were starting to get to these all-time highs. So it was kind of not surprised to see this stalling action. Needless to say, it did end up becoming an issue as we got to the end of the week. So what we ended up doing was we kind of pulled back, volume increased and lightened. We looked like we were trying to rally towards those all-time highs, and things were looking really, really positive going into Friday, and we completely rolled over. And we are looking, sorry, I'm all over the place right now. Sorry, long weekend. This is on the S&P, but I'll be honest, it's really not much different when we look at the NASDAQ. It's pretty much all the same, right? Literally all the same. So we were just trading a little bit more tighter sideways on the NASDAQ. And what ended up happening was we really looked like we were going to have a strong support at the 21 on Thursday, where we opened, slowly rolled over intraday, then rallied, got back above the 10-day. That was really good. But then had a second test of those moving averages. Here's what's interesting about Friday, though. Though we broke below the 10 and the 21, we found some clear support, not only at the 50, but also at these high levels right here. So positive to see the support. Would have liked a little bit better of a close. Don't like the downside volume. But overall, we haven't broke yet, right? Given that we rode up onto the right so fast, we were kind of stalling. That kind of rollover was some sort of a pullback, was kind of expected. We were hoping it wasn't going to be as violent as it was. We'd hope it happened on lighter volume, but we don't always get what we want. Needless to say, again, we found support at those key levels. The question is, can we hold support? Or do we end up testing or rolling through it again? So, yeah, that's the big thing right now. This 50 and these highs, not prior highs, but this kind of price level right around here is something that we're really, really going to keep an eye on. We, in my eyes, really want to hold that level. If we break back into this sideways range, it's starting to give the same vibes that we had. Can't really see it on here, but like going back to how we were last year, right around the same time frame. Just the sideways choppy action. Not fun for trading. Not fun for trading. There were some chances to get through these little rallies and make some money, but overall, this is not the type of market we want. So right now, things are looking just where we're kind of in that wait and see moment, and just see if we do really truly find some actual support here, and if we can get another rally, and if this is just kind of a small pullback in the attempt to make those all-time highs. We'll look at the weekly really quick. There you have your weekly. So pretty steady uprise minus a couple of these dips here. And then this is, these last couple months, really honestly, going really back to here since the beginning of October. It's been a chop fest. It's been a little bit rough for especially more position traders, even for some swing traders. It's been a little rough, but yeah, needless to say, this is just sometimes what happens in the market. You don't always have these beautiful, strong, clean uptrends, and sometimes the market environment gets a little more difficult, and then you just need to let off the gas a little bit. All right, so with that being said, let's now jump over to Deepvue, and let's look at the industry groups. Theme tracker, looking at themes. This week, Gold, silver miners. I talked about it last week that they were showing some strength. We talked about a lot of those charts presenting those kind of VCP patterns. A lot of them broke out from those VCP patterns, having a really, really strong week. So cool to see that there, because it was something that we were kind of keeping an eye on every week, talking about those patterns forming, and they did break out. They have done fairly well. You also have some airlines, aerospace, banks, telecom, a couple other areas strong. Bitcoin miners still getting crushed. Semiconductors, don't like to see that. A lot of, I think, the growth stock names, a lot of AI stuff tied to semiconductors got hit pretty bad this week. Biotech and medical was really doing very well. This was the first week really where it got hit. Growth stocks getting hit, so we're starting to see some of those growth names take a hit. Maybe a little bit of churning action going on, but we'll see what happens. 1 month. Silver miners, that's the big talk. Silver has been one of the more strong moves that we've seen as of the last month. Genomics, healthcare, and where do we have biotech? Why don't I see it? There we go, biotech. Those names, I think a lot of us have been seeing those on our watch list as well, and oil and gas. In 3 month is really what we're seeing, exactly what we're talking about. Silver, gold, biotech, oil and gas, semiconductors, healthcare, solar, quantum, and Bitcoin miners going back a little bit, kind of seeing what has been in favor for them. So, yeah, this is the big thing here. Those gold and silver miners definitely showing a lot of strength, continuing to show strength, having those like second stage bases, and then continuing up. We'll go quickly to the ETF tracker. Let's just reset this. We'll go to the 1 month. Let's click through these real fast. So cannabis, possibility that's coming out of like a Stan Weinstein breaking maybe a stage 1. We'll see. But really, really strong week. Really, really strong week. This is off the news, I believe, that Trump was going to make cannabis or weed, marijuana, whatever you want to call it, make it a Schedule 3 substance, which would be a downgrade. So big move off there. Kind of creates a lot of a lot less issues for people who are running businesses, even in the states it's legal from a federal level. So that was that big kind of move off the news there. Question is this going to be a start of a stage 2 uptrend, or is this just chop that we're going to be dealing with? So still something to keep an eye on. Alternative harvest. Let's see what else. Cannabis. So a lot of cannabis stuff going on. This is why I like using these things, because like it gives you a little bit of insight just to see that we're kind of, even though we had that strong move in cannabis, ETFs, it was really that might possibly be trying to make that stage 1 breakout a little too soon. Silver continuing to show that strength. Silver. Airlines. Unfortunately, I can't play around in this area. Not allowed to buy those kind of stocks, but there you guys can see that. Space, you can see that there. Retail looking like it's possibly starting to make a breakout. Gold miners. This is that kind of VCP type of pattern that we had. Very nice. Banks. Biotech still holding up, looking strong. Copper. Steel. Some of those. Metal mining. It's another one. Genomics. So we're kind of seeing just what these charts are, and it's starting to see some of these that are kind of like even genomics, where it's like kind of extended, not really breaking out of a pattern. And that's what I'm kind of looking for here is, I want to find stuff like, where are we? Hold on. I want to find stuff that's possibly breaking out, not stuff that's extended. Stuff that's maybe more like this versus, or this, or even this versus something that is like this, just super extended. Doesn't necessarily mean there's stocks that aren't going to be playable in there, but more often than not, just things kind of get pretty extended. Happy Pet, how do you read market breadth? You're kind of looking at it, man. I'm looking at a lot of different things. I'm looking at the overall market. I'm looking at the industry groups and seeing what they're doing. I'm looking at stocks when I do my screening for the week and seeing how charts are and how breakouts are working. Just really a lot of the stuff that I'm going through every weekend with you guys is just that's my overall look at how I look at the market personally. The big two things, I'd say the biggest thing I'm looking at is are we trending and in what direction? And if we're not trending and we're choppy, that's where I try to, really, really be cautious, because that's where position traders, even swing traders, get beat up the most. All right, so you guys kind of get the gist of what we're seeing here. Very similar to the industry theme tracker, but get a little insight into the charts. All right, so let's talk exposure levels since we're talking market breadth. Going into this week, even in the middle of this week, things look very, very positive. But I still had a little bit of caution because we knew we had those all-time highs to deal with. We've known to have those rallies and just that choppiness that we've been experiencing. We haven't fully broken out of that kind of area. Yeah, we're possibly going back into that range. Let's see, though. It is right now, like a lot of the stocks that I was kind of looking at, or stocks that I had owned, had broke down on Friday, but didn't really break key levels. So it's kind of a wait and see. I think this is, again, we were getting into that where I think full exposure in the beginning of the week, full exposure felt like it was right. Now I'm kind of back into that reduced exposure. Over 50%, but probably under 80%, somewhere in that kind of range is where I think most people probably feel comfortable until we get a little bit more of an answer as to are we going to find support here, or are we going to kind of continue to roll over, go back into that kind of range bound area that we had spent a lot of time in. Yeah, so definitely keep a strong watch list. If this is just a pullback, there's going to be another rally and there's going to be money to be made. Important, very, very important. Have a plan. I talk about this a lot. But there are people that I know will say, like, well, what are you doing today? Or what's your plan? Or, what should I do today? It's like, you shouldn't be asking that question. You should have came up with that solution the day before anything happened. If the market acts really strong, you should have a list of stocks you're ready to buy. If the market acts really crappy, well, you should have a plan as to what you're doing. What things the market does. Hey, if the market breaks this area or goes into this range or does XYZ, I'm reducing exposure. Here's my plan on what I'm selling and why that's being sold versus this is being sold. And then individually in those stocks, if a stock gets and breaks below this level, this is a sell point for me. This is a half sell. This is a full sell. So you should have all those things kind of hashed out way before the market opens. And that's going to prevent you from making emotional decisions, because when the market's open and things are chopping around or dropping or jumping, like, you can make emotional decisions. You could buy something you shouldn't be buying and chase it. You could be selling something that you shouldn't be selling because you're fearing you're going to lose money. So just have a plan going into next week. Know what you're going to do in all directions, and try to avoid that choppiness. Choppy markets are what's going to beat you up the most, because it's that death by 1,000 cuts, getting stopped out constantly. All right. Let's jump back to Deepvue real quick. We can talk. Well, there you guys go. You can see the stocks that I own. So 5 is one that we had talked about on this. This is what I'm talking about. This is giving me no reason to sell. No reason to sell. It's a little extended, but it's performing well. MU. This one is getting ready to report this week. It started to break out. I took a buy on it because I was hoping to get a little bit of some cushion going in because of how strong the market was looking like it was acting. And now it kind of sat back, pulled back, and squatted. And right now, likely, I did already sell some of this. I wanted to see how we kind of closed. And I'm basically going to end up probably selling this before the actual report, just because I'm not going to have enough cushion going into there. I'll be honest with you guys. I probably should have sold this completely at close on Friday. I was just trying to see if we kind of had support and then rallied from there. Reddit, this is another one, kind of broke out. It's kind of squatting. This one, though, doesn't have earnings. It hasn't broken any of my sells. So basically flat on this one. And I sold half of this just as I pulled back to flat. Not just because of what the stock was doing, more because of how the market was acting and wanted to reduce exposure. And then a small position here in slide. This made a pretty strong move. Did not like this Thursday candle. Friday, we kind of not as bad, but this is not really more of a CANSLIM trade. This is more of an IPO kind of play. Other than that, we had talked about like NEM. This made a great move. What is it? G. There's a couple other gold names that are making good moves. But then you kind of look at some of these names like NVIDIA, right? That looks not good. AMD, that looks not good. Bigger names, Tesla looking much better. Google looking great, right? Google looking perfectly fine. Pulling back to that 21. So you're seeing a lot of this mix, right? You're seeing some of these names acting really well, some of these names acting horrible. And that's kind of where we're kind of at in the market. There's a case to say that this is normal, healthy action. And hey, what's going on, Brian? There's a case to say this is normal, healthy action. This is a pullback. We rallied. I'm not too concerned. Sorry, stocks are holding up. And there's a case to say we're again meeting resistance as we're trying to keep making new highs and just going sideways. There's stocks that look great, and there's names like that look horrible. So it's a big mixed bag right now. And I think when you're in that mixed bag, you don't want to be too exposed, but you also don't want to be underexposed. So you kind of want to just be dabbling in the market. So if we do get the big rip, the market will pull you in. You'll be, able to make some money, but you're also not overexposed. Where if the market rolls over, you're that concerned about the the losses that you take, because that's what we got to do. We got to think risk first. All right, that's really all I got for this week, guys. Again, sorry, a little longer weekend for me. A lot going on. Just didn't get a chance to get this done, so doing it a little late on a Sunday night. I apologize for everybody. But thank you for the couple people who are in here now live. I appreciate your support. And yeah, I'll keep everybody posted. And look, if you're watching this, best thing, subscribe. And when I decide what time I'm going to do this, the first people that know are the people that are subscribed on YouTube and have the little bell thing set up. So yeah, other than that, that's all I got for this week. There you guys go, the YouTube channel. Like I said, subscribe to the YouTube channel and turn the notifications on. You will know when I am playing these live streams. So I apologize for this week being late. And if you don't see it up, you can always reach out to me on any of these platforms. Just ask me like, yo, what's the deal? What's the plan? And if I have a plan, I'll let you know. Discord, huge shout out to everybody in Discord. Great community. If you want to check that out, there's a link in the YouTube, and on X, just shoot me a message. And email, if you want to reach out to me, email, or if you want that ETF list, just email me with the subject "send ETF list," and I'll send you the Excel file with all those ETFs that I look through. That's all I got. Enjoy the rest of your weekend. Happy Sunday, and yeah, be ready to trade for